Hello, everyone, and welcome back to Credible Perspectives. This is Season 2, Episode 7, and we are joined by one Mr. Eric Kinoti of Truquantum Consulting. Karibu sana.
Thank you so much.
Since behind the scenes you were told to introduce yourself, tell us more about what you've done and how you got to where you are in the tax world.
Okay. So by training, I started as an accountant, was transitioned into a lawyer, but I prefer to be called a tax expert since I've been able to merge law and accounting, which means I've been in this space for the last 17 years, having previously worked in other multinational institutions, but the most that resonates with what I'm currently doing is PwC, where I did a stint of 7 years. Truquantum, next year will be turning 10 years. So yeah, and I enjoy what I do because I'm able to relate with individuals, small businesses, and even multinationals as we try to assist them from being tax compliant to even just being tax efficient in their operations.
Congratulations
So I'm happy
on
to be
your
here.
10 years.
Looking forward. We'll have a big party.
And please invite us. We shall be there. So you have worked for the multinationals like PwC, then transitioned into a small boutique tax consultancy firm, which means you've worked with big companies and you've worked with SMEs and individuals, like you said. How has that experience been like? Are all across the board tax compliant? Are there those that run away from taxes? How has it been like?
I would say most businesses, when they're starting out, what I've come to pick is that some are always willing to be tax compliant. Some know how to be tax compliant. Others know what they need to do to be compliant. The question is, which struggle does someone pick? So you'll find some they know to do, but are not doing that. Or they don't know what they're supposed to do. So that's where they reach out and we're able to help them. Or some already are doing something to be compliant, where they know the laws, what is required, but the tax knowledge is limited by what they know. So we come in as experts to try and assist all those three categories that I've mentioned into now being able to be tax efficient.
Okay.
Yeah.
So how do you structure these services, especially for the small and medium enterprises and individuals?
So at the end of the day, maybe I just give a background. For you to pay tax, you must have generated an income. And that means that you must be running a business that is able to generate that income. So what we try and do is structure our services based on either we look at compliance, which is very key, because based on our tax laws, if you're not compliant, there's a penalty for that. So by us helping you to be compliant, we're also having a conversation where we look at how can we help you maybe structure things differently, become tax efficient. And this is where tax planning comes in. So as much as we are also looking out for you, also as a business, we are trying to grow. We also look at what other services can we provide by looking at what are the pain points for the various, if it's individuals or small businesses.
Okay.
Yeah.
You've talked about tax planning. What does that look like?
So tax planning is basically the way, I'd give an example. If you are planning to leave Riverside and go into CBD, what route would be easier and cheaper for you? So tax planning is looking at the end goal is to avoid tax leakages, and leakages is where, yes, you are paying the right taxes, but maybe you are paying more than you should be. I know the government would be happy through KRA collecting more, but you as a business, that cash flow could have gone to something else. So in tax planning, in a nutshell, we just try and help you tailor-make your business or look at what services or how can you treat certain taxes. Yeah.
Where do these leakages come from? In what scenario have you seen where someone has ended up paying more tax than they should?
I can give maybe a basic one would be maybe incurring some expenses where you are not sure how should you treat them. Or another one would be where I incur CapEx, which is capital expenses. And this would mean where maybe I've bought equipment And I'm not sure, yes, I know the accounting treatment. It will go to the balance sheet. My cash flow will be affected, or if it's a loan, it's in the bank. But do I know that I can get a capital tax allowance, which basically means that if I've bought a computer that I'm using in my business, even as an individual, if I'm creating content, that's my asset in the business. When I'm preparing a tax computation, I'll get a tax relief or a tax break where I reduce my taxes by utilizing the allowances provided. Yeah.
I don't think many people know that. So I want us to spend a bit more time there. How is it me, the business, who determines what is should I use the word tax exempt at this point? Or who anyway, the question is it me, the individual, or is it KRA or the tax act, the income tax act, or in the finance act, for instance, that determines what in my spreadsheet can be exempted from tax or reduced tax?
Okay, I would avoid using the word exempt because it means something totally different.
Yeah.
So basically what it means is we get a tax allowance. So this is provided in the Income Tax Act. Okay. And maybe to dispel Finance Act, I usually basically prepared every financial year based on government's budget and the needs that they have, where we look at the income raising measures which come through the Finance Act, and then the expenditure which will come in their expenditure statements. So as an individual, what you need to be aware is that if you spend any money, and I'll go to the most basic, when you spend any money that is business related, first keep a record of that, receipts and all that. And now based where you've incurred a cost, maybe to acquire, I'll use the example of a computer that used maybe for content creation, maybe a MacBook. They are not cheap. So you'll find that you get an allowance that at the end of the day, if I have taxable income, a certain amount, I'll be able to reduce what I'm paying based on the rate that is provided in the Income Tax Act.
Okay.
Yeah.
So for instance, if I buy a vehicle worth 19 million or 20 million, and I register the vehicle in my business name, not necessarily in my individual name, can I claim that as an expense?
So without giving a lot of detail, I would say yes and no. And the reason I'm saying yes and no is that first, yes, if the company is being used for business, then and registered and bought and by the company, that means the logbook is the company's name. That would be treated as an asset that qualifies for capital expenditure. The no part is that there's what we call what is allowable or qualifies to be claimed. So there's a whole computation that will go into that based on what the law provides.
Okay.
Yeah.
Final question as we move on is there a maximum to it? To
a
the
maximum
capital expenditure allowed?
So for other assets, there is no limitation, but when it comes to motor vehicle, there's what that we look at, what would qualify up to a certain amount.
Okay.
And that's a computation I'm saying that would need to look at.
Yeah. All right. So Truquantum provides a wide spectrum of services from compliance to custom duty support. How do you structure some of these services to meet the evolving needs of the businesses you...
So when... Maybe to digress a bit, when the idea of Truquantum came up, I was purely looking at providing tax services. But with time and based on our mission and vision, which was to provide tailor-made services, we found that there was a need also. I cannot advise you on tax if your accounting is not correct. So we were able now to even start providing accounting and bookkeeping services where we become your accountant in your office. Okay. The difference is that since we are practicing, we have to keep abreast with the changes in regulation, may it be accounting standards, may it be the tax codes. So having said that, we are able to provide services based on our clients' needs.
Okay.
And at times, before we even take up a client, we also undertake due diligence. We don't to advise you on tax, but because you've requested for tax services, but your accounting is in a mess. because the next day, if you're audited and issues come up, the first person who gets the brunt is Truquantum.
Yeah.
So to avoid getting ourselves in such a situation, we've tailor-made our services to cater for different pain points that clients have.
Okay.
And being the experts, we also like clients who can listen to us. So that I tell you, yes, you've given me your financial statements, but when a quick review of them, I'm seeing there's a problem. Then you'll hear a client telling you, but I've been using this auditor for the last many years. How can you say? So there, it's a tricky balance, but at times by the time someone is coming to seek our services, most of them have been ready and willing to listen to us. Yeah.
Okay. What other pain points do people have apart from bookkeeping and accounts?
Just knowing how treatment of certain expenses from an accounting or tax point of view. Also knowing what are the triggers that would exist that would make you a candidate for a compliance review by the Kenya Revenue Authority.
Okay.
Yeah.
All right. So when it comes to taxation in Kenya, for instance, in the last few years, we've had the housing levy brought about, which there's a whole discussion on whether it's a tax or a levy. We've also had the social health insurance fund conversation happening. And I'm curious to hear from a tax expert's point of view. Do you see its effectiveness in linking the taxes to the development in Kenya?
I think by the time the government was coming with the idea, if you look at even the policy papers that came about, the idea was to try and provide affordable housing. Lucky for me, I did a paper on housing, especially around mortgages in Kenya a few years back. And I realized there's a housing gap, because most people are not able to afford a decent home. And also we've seen the cost of land going up. So when I look at that question, my point of view would be for the bit that the idea was good, was a good idea. The raising of funds around it, okay, money had to come from somewhere. But also the question was, the previous regime had started the same program without having to go into taxpayers' pockets to ask for more money. And having looked at how every other day you read about how funds are not being utilized well. So I would say the idea is noble, provision of housing, because I think even in our constitution, every person has a right to have decent housing, decent healthcare. But these are things that we already have a social contract with the government, and we pay taxes, not just housing levy or SHIF. Whatever is provided should be adequate to provide these services. And this I say without batting an eyelid, where there's a lot of wastage. This money is there. We do not need to overburden people, especially in current economic times. So that's my views as Eric Kinoti, not as Truquantum, yes.
So personal views does not reflect the institution, the company you come from.
Yeah.
Okay, interesting. Let's move to tax reforms. And I'm coming at this from the fact that you've worked in tax for a while and in specific sectors, and I want us to talk about oil and gas. But what are some of the tax reforms that you believe are able to strengthen infrastructure financing without overburdening the taxpayer?
So I'll give to answer your question, just a short experience around oil and gas. I remember a few years back, around, is it 2012, 2013 there, where we had a lot of foreign companies, multinationals coming to explore and see whether they could find commercially viable oil and gas deposits. And we had the likes of Madaraka, Total, and just name them, and CNOC, which I happen to have worked with while at PwC. And I remember most of them wanted to pay taxes, but you could find that our tax code was not providing that opportunity. And would go to KRA to ask them, can you guys create this so that these guys can be able to pay taxes? And I'll give an example where for oil and gas, you'll find there are people who come, maybe their contracts say they'll be onshore for 6 months, offshore the rest of the period. But now the employer wants to pay taxes on their behalf. But here we are being told for you to pay taxes on behalf of someone, they should have a PIN. For you to register a PIN, it's a whole process. So we're able to ask them, how can we go around this, create maybe a tax code where guys could be able to remit, because these companies, given their global operations, the compliance is a very key thing. So this journey started by us having discussions, which some were hitting the wall, and we saw an opportunity to have maybe sensitization sessions where I would invite Finance Committee of Parliament, would have Ministry of Energy, Petroleum and Energy representatives, would have KRA team coming in, Parliamentary Budget Office coming in, and Treasury. And we're able to just take them through how the industry works. And this now, because the oil and gas community had formed a oil and gas association, it's called KOGA, Kenya Oil and Gas Association. So they're able to pull in funds, would take them to different hotels and just take them through. Now, and us PwC at that time as experts would do research. Like I was involved in looking at different jurisdictions, not just the development world, but also near home. I would look at Nigeria, look at Ghana, which is a Commonwealth like us, and look at how are they treating certain taxes in their industry. And then look at also if it's Middle East, how do they deal with that? If it's in Europe, and then come up with an analysis. And over time, we're able to sensitize them, and then we were able to come up with budget proposals or things we thought that could be changed. And fortunately, the whole of the 9th schedule in the income tax, which covers oil and gas, we're able to actually revamp it and modernize it to the current, to be able to cater for the industry at the same time, also the government be able to collect. So there's usually a perception that whatever a taxpayer is proposing to the government is about reducing taxes. But at times it's also helping them collect more in a more efficient way.
Okay. Yeah. So there's the element of sensitization, there's the element of Section 9, we've mentioned, of the income.
The ninth schedule.
The 9th schedule, of the income tax which you amended. Is there any other reform you think would work? So leave alone what has already happened. What would you ideally want to happen in that sector specifically?
Currently, without even just looking at so actually the answer would be, I don't have a specific item that I would maybe request that the government changes, but it would be more around being able to listen to stakeholders. Because before you tax me, I know my pain points and what it would mean. And given that our tax legislation has been changing every year, you are not able to predict as a business person what next year's finance bill will or act will hold. Yeah. So it's a matter of just the stakeholder engagement being a continuous conversation.
Okay.
And now being industry specific, so that we're able to pick what are the pain points, and then also taking time to learn what do other jurisdictions do, but not just picking everything and copy and pasting, but looking at what fits well in our country.
Okay. I also hear you say predictability without saying predictability. You need to know what's happening or what kind of taxes will be meted against the people. That's a harsh word. What kind of taxes like the sector will be obligated to pay in the next possibly 5 years or so. But with the stakeholder engagements consistently, then you know if there's need to change and why we should change.
Yeah, that's true. And I think that even brings us to the conversation of having a national tax policy, which has been a conversation for the longest. Actually, for that 17 years, this has been a conversation that has been ongoing. Yes, we've made some remarkable steps where we have a draft policy. Yeah. Problem is that the draft has been there for the longest. So, and maybe I stand guided, but as of I'm aware is that it's yet to be implemented or actualized. So the reason this is very key for any investor is that when you are making a decision, you want to invest maybe in a certain jurisdiction, you'll have a team, either a lawyer to look at the legal implications, a tax expert, a finance person to look at, if we put in maybe $1 million, what do we expect to make out of it in the next maybe 5 to 10 years? Mm-hmm. So where there's predictability, someone will come in comfortably and they'll put in their money because now they'll be making an informed decision. Yeah. However, in our current situation is where our laws depend on the tax regime, the government regime of the day, and maybe the appetite of raising funds, maybe through tax as one of the funds raising mechanism apart from debt. But they don't take time to also look at the implication. And that's why I'm saying stakeholder engagement is very key at any step. But where there's a tax policy, I already know in the next 5 years, there's predictability. Mm-hmm. The same for the government. There's predictability that if we spur the economy to grow by 10%, it means our taxes, since we already know what we need to collect in the next 5 years, there'll be that 10% growth. Okay. So, and the question now, the conversation should move from, do we increase the tax rates? Mm-hmm. Maybe we might do analysis, realize if we reduce, we might be able to collect more. And this happened during COVID, where some tax rates were reduced, corporation tax, and businesses had more cash flow to spend or to reinvest in their business. What that means is that they're able to spark growth. Mm-hmm. And in return, the government makes more money. So this is something that we need to look at, where a businessman's lens, or usually say you put on the other person's shoe to understand before implementing some of these policy directions that we get. Yeah. So predictability is very key in any sector.
Any sector. All right. So as we talk about predictability and taxation, I want us to look at the East Africa community and the introduction of the AfCFTA, that word, AfCFTA, and opening cross-border opportunities. And I want to link it with your tax planning conversation that we had a bit earlier. Are there any opportunities that Kenyans should be looking out for, or any risks that they should be aware of as they think of expanding to the other countries?
Okay, I think when it comes to tax harmonization, in a certain way, and speaking around East Africa, we tend to borrow from each other. Unfortunately, some of the practices that we borrow are harmful than they should help for the government of the day to collect taxes and use it wisely for development or provision of services to its populace or the people they govern. So opportunities, yes, exist, because now this brings in the issue, we are talking about predictability, where if we have a unified tax regime across East Africa, I'll know if I invest in Rwanda, this is what I expect. If I invest in Tanzania or Ethiopia or even Sudan or Burundi, and Congo, which are upcoming markets, what do I expect in terms of a tax regime? Because I could be making money in one country, but bleeding in the other. So when I look at whether I'm in business, it becomes a zero-sum game where there's money coming in, but at the same level it's coming in, it's also flowing out. So in terms of tax planning, yes, it creates that opportunity where there's certainty. As a business, you're able to know if our plan was to expand, how are we going to expand? And then looking at the various tax regimes, if I use a certain maybe structure, how will those funds flow? Will it be easy to have, if they're holding companies in Kenya, how can we be able to repatriate funds from let's say Burundi back to Kenya, in a tax efficient manner without bleeding, where you are making money, but at the same time, you are losing out money. And I think if someone looked at one of our biggest Kenyan brands, like I'll pick Equity. You'll find that in DRC, when you look at their numbers, they are making good money. If you look at when they went to, Sudan, they'd make money, but now bringing in funds. You see also when we talk about harmonization, it's just not about tax policy. So in terms of even tax planning, we look at how easy is it to repatriate funds from a certain jurisdiction to your jurisdiction.
Is it easy?
Some jurisdictions are easy, others, and I wouldn't want to jeopardize my visiting maybe one of those countries. But in Kenya, we have a very seamless, our financial system is robust, that companies are able to provide services in Kenya, pay their taxes, and still repatriate funds with ease. There are countries where maybe you'll find their foreign exchange restrictions are ridiculous. So if you had invested money there, you can't remove that money to another jurisdiction to spur growth in the group. Then in terms of risk, I think I alluded to this, where most African countries, the government of the day determines the tax policy, or not policy, but the tax measures that come into place in each financial year. So with the harmonization, my prayer is that as much as we maybe sign and ratify the various legislation that needs to be there, we'll be able to also implement. Because we've seen, as much as we are in East Africa community, you'll find today Tanzania says we'll tax eggs and milk maybe from Kenya at this rate, or Uganda says the same. Kenya retaliates. So we are not even sparring business, because I think the people who came up with the East Africa community, our forefathers, the vision was to create an environment where Truquantum can open a branch in an office in Rwanda and work, and by the same point we are creating employment and more revenue for the country that we are there. So we need to move from short-sightedness, where we look at this is a Kenyan getting more money, or Kenyans are more aggressive, to a point of where what value are these people bringing to our economy.
As we wrap up, as a future forefather, what would you like for the future generations to have seen change in the tax regimes?
So I would pick, I would like them to see an environment where we are adapting. And I'd pick an example of the tech world, where the conversation shifted from manual to digital, and the government was able to look at digital services tax. Is it working? Is it efficient? That's another conversation. And then look at also adapting. Now we are hearing about the conversation recently has shifted to AI. So what I would like as a forefather, maybe in the next few years, is a situation where we move away from just looking at tax from a lens of compliance and just paying taxes, but also looking at how can we change our tax regime to accommodate the shift in business environment, the shift in how we do business, where we do not just stick to what is written in black and white, but also looking at what could be the gray and how can we use that gray to spur growth. Because by spurring growth, then it means that we're able to pay more taxes. And by improving our governance, we're able to get our social contract needs done. I should not be paying taxes, fuel, levy, and I'm hitting a pothole, which means I have to waste time fixing the puncture, buying a new tire, while those resources and my time would have gone to something better. So I'm praying that the leaders that we elect will be able to also have that vision and think of looking at tax differently. Because now tax has become something big where it has become a boardroom conversation. Yeah.
Is that a good thing or a bad thing?
It's a good thing, because it means the business leaders are embracing the fact that they need to ensure that tax is also taken care of, not just from a fear point where if we are not compliant, we'll be penalized, but from a point of how can we do things more efficiently, be tax efficient in our decisions that we make, and even the contracts that we draft.
All right. Thank you so much once again for honoring our invite and joining this episode. And thank you to our viewers for being part of us. We hope to see you for this and more conversations in the upcoming East Africa Tax Summit that will be held from 24th to 26th of September. More details will be below.
Okay, thank you.